Hey guys, welcome back to the channel. In today's video, we are going to talk about hotspots. As we have seen in the last few years, we can't simply buy a property anywhere and expect to see capital growth. As a matter of fact, based on median house prices and housing data, if we had purchased a property in Melbourne or Sydney in 2017 and sold at the current prices, we will be making a loss. However, while some of Australia's biggest markets have been performing very poorly, there are those markets that have been performing extremely well. We're talking about markets that have a rental return of 5 to 7%. And these markets have also seen a growth of 30 to 50% in the last few years. So let's talk about these red hot property markets. We will also talk about some markets that are set to boom, and also discuss how we can position ourselves to take full advantage of the next property boom. So without further ado, let's get straight into it. Let's start with a bit about me. For those that are new here, my name is Zhang and I've been investing in real estate since 2013. I started my journey making a lot of mistakes, and after doing a lot of education and self-learning, I was able to grow my portfolio from 2 properties to 8 properties in the last 4 years. My portfolio has grown by more than 30% in the last 3 years, and despite everything that we have seen in Melbourne and Sydney with the price drops and lockdowns and restrictions, my portfolio has actually done extremely well this year. I'm always looking to add properties to my portfolio, and there are some markets that I'm very excited about. So let's take a deeper look into this. Let's start with Victoria. Melbourne is a very interesting property market. Out of all the major markets in Australia, Melbourne saw the sharpest price drop this year. However, with Melbourne now coming out of lockdown and our case numbers being so low, I think Melbourne will start to recover in the next few months and maybe even start to pick up in the next year or so. However, it is a market that I'm not personally looking to purchase into right now, and here is why. First, the rental return is very low. We're talking about 2 to 3% here. That doesn't even cover the interest repayments on the mortgage. And secondly, the vacancy rate is much higher than what we will find in some of the other markets such as Adelaide or Hobart. I understand that Melbourne will see significant population growth in the coming years once we start to open our borders again. However, it is simply too expensive to buy a nice property in Melbourne, and it is also very expensive to hold that property after we purchase it. Anything within 20 minutes of the city is well above $1 million. If we look to the east side, like Hawthorn and Camberwell, those properties are all in the millions. And if we look up north, the Prestons and Coburgs, those are all also well above $1 million. The only area where the properties are still relatively cheap is the west side, and if you absolutely have to buy a property in Melbourne, then that's where I would recommend. If we go to the western suburbs, we got areas such as Sunshine, Braybrook and Maidstone, which are all about 20 to 25 minutes from the city, and they are very close to amenities such as schools, hospitals. However, even with these cheaper properties, we are still only getting a 3% rental return, which is extremely low. I personally believe the real hotspots in Victoria are in the regional markets. My personal favorite is Bendigo. I have 2 investment properties here and they have done amazingly for me in the last few years. Both of my properties in Bendigo have not had a tenant change since my purchase 3 years ago. And instead of spending $700,000 to get a property that only has a rental return of 2 to 3%, it is very common to find properties for under the 300k range that returns 5 to 7% in these regional markets. And if we look at growth, the regional markets in Victoria grew by 5.1% during the September quarter. And during the same period, metropolitan Melbourne fell by 1.7%. And based on what I'm hearing from the agents and what I'm seeing in the data, Bendigo is really set to take off. With extremely low vacancy rates, very strong rental returns, and higher levels of competition between investors and first home buyers, it is a market that is set to perform very well in the next few years. And I'll recommend you to take a deeper look into this market on your next property search. Now let's move on and talk about Tasmania. This is a very interesting market, and it has been Australia's top performer in the last few years. Hobart is the biggest market in Tasmania, and they have a real issue with housing shortages there. I have investments in Hobart and they have seen very strong rental growth and capital growth in the last few years. However, with the recent boom that we saw in Hobart, which pretty much saw properties increase 40 to 50% in 4 or 5 years, you would think that the property market there will be slowing down. And you will be wrong, because the lower end of the market there is still booming. I was recently helping a friend with a property search in Hobart, and we came across a property for $260,000 in a suburb called Bridgewater. It was only listed a few days ago, So we decided to give the agent a call to get more information about the property. And upon calling the agent, we were told that the property was sold within 24 hours with 8 competing offers from both investors and first home buyers. With so much activity in Hobart, I think it would be very hard to secure a good deal here. So I personally think the real hotspots in Tasmania are Launceston and potentially Devonport. Launceston is a market with just over 100k residents, and it is very similar to Hobart. It also has a problem with housing supply, and it has very low vacancy rates. This puts upward pressure on both the rental returns as well as the price of the properties. This is provided that your property is desirable and in the right location. Competition in the rental market means you will get more quality tenants applying to rent your property. This leads to longer leases, higher rent, better quality tenants, and most importantly, you won't have to worry about people damaging your property, making it a very stress-free and profitable investment for you. Looking at historical trends and data, Launceston is very similar to Hobart, but it tends to lag a few years behind. And with the amazing growth that we saw in Hobart over the last few years, it will suggest that Launceston will see something very similar in the coming years. In fact, I believe this boom cycle has already started. When I first started looking at the Launceston market in 2018, there were plenty of properties for sale, and it was definitely a buyer's market. However, fast forward to now, it is definitely a seller's market, usually with many offers now competing for the same quality properties. I had a chat with my agent in Launceston a few weeks ago, and he has told me that despite everything that's going on in Australia, Launceston is probably the busiest he has ever seen it, and the market there is really starting to take off. Now, let's talk about Adelaide. This is one of my personal favorites, and this is where I'm looking to invest next. I think it has tremendous potential, the same low vacancy rates as Tasmania, and a much bigger population to support a long boom cycle. Let's start with its performance so far. If you look at the data here provided by the South Australian government, the house prices in metropolitan Adelaide has been growing steadily over the last 2 decades, from $208,000 in 2016 to the current price of $492,000. While the growth is not as impressive as what we have seen in Melbourne or Sydney or even Hobart, it has been very steady, even during the 2018 Royal Commission and 2020 lockdowns and restrictions. There are a few things that we can take away from this. One, Adelaide is a market that has much lower levels of speculation in comparison to the other major markets, which saw bigger corrections in 2018 and again in 2020. And number two, there is definitely lower levels of mortgage stress in Adelaide. This is reflected by the slow and steady growth that we have seen in this property market. And finally, I personally believe that the slow growth that we have seen in Adelaide over the last decade means that Adelaide has a lot of catching up to do, and that the market there is very undervalued. And we are likely to see a boom cycle similar to what we saw in Hobart in the coming years. Let's move on and talk about Perth. It is a market that I really like. It has been falling for a very long time now due to a decrease in mining. However, at such a low price and how long it has been falling for, it should be very close to the bottom. 2021 will be a very interesting year for Perth, and I think that's when we're going to start seeing an upward trend in the Perth prices. Based on what I'm seeing in the market and what I'm hearing from the agents across Australia, a lot of investors are starting to pull their money out of Australia's biggest markets, such as Melbourne and Sydney, and putting that money into the smaller markets, the smaller, more undervalued markets, such as Perth, Adelaide, and Tasmania, where they can get very good rental returns, as well as good upside growth potential. And once again, going back to the recent housing data, we are starting to see that upward trend in the Perth market too. I will definitely be looking at Perth in more detail in 2021, and I'm sure I'll be able to see a lot of growth suburbs there. For my viewers from Perth, what are you seeing in the market? Is it starting to pick up? Let me know in the comment section below. And lastly, let's have a chat about Sydney, our nation's most expensive property market. If you guys have seen my older videos, you will know that I'm not a huge fan of negative gearing. If you negatively gear a property, you are making a guaranteed loss on paper, and you are hoping to recoup that loss through capital growth in the coming years. It might work for those with very high incomes, but for me, it is just not good enough. I believe there are much better ways to get capital growth without sacrificing cash flow. And as the last 2 years have shown, that is definitely possible. There are a lot of good things about Sydney. The big population, high population growth, high paying jobs, and industries that are pretty much COVID proof. However, the vacancy rates are not great, the rental returns are horrible, and it's a market that has first home buyers forking out close to $1 million for the first property. With investor activity slowing down, do first home buyers really have the ability to keep pushing up prices in Sydney? I personally don't think so. And if things were to go bad, the biggest markets will often be hit the hardest. And this was proven this year, where Melbourne and Sydney saw the highest levels of declines. There is definitely a lot of risk involved with investing in such expensive markets. But look, that's just my personal opinion. I could definitely be wrong. And there are definitely a lot of wealthy people in Sydney, and we could see prices go up in the next few years. But I just personally prefer to invest in the more undervalued markets. And because of that, Sydney is not on my watch list. Alright guys, I know I haven't said anything about Queensland, but to be honest, there's just not much to say about Queensland. It's a market that has seen pretty steady growth in the last decade. I don't think it's overvalued or undervalued. There are some regional markets in Queensland that have very impressive rental returns and very low vacancy rates, and Queensland in general is seeing significant population growth. However, it's just a market that doesn't really excite me. A lot of experts and gurus have been saying that the Queensland market is going to boom in the coming years, but they've been saying that for years. And to be honest, it hasn't really done much. 2021 could be a very good year for Queensland where we finally start seeing that explosive growth, or it could be another year of doing not too much. But hey, that's just my opinion and I could definitely be wrong. So if there's anything that I'm missing, please let me know in the comment section below. Alright guys, that was a lot of information. I hope you guys were able to make sense of all of that. With everything that's going on in the Aussie economy right now, the low interest rates, the infinite government printing to prop up asset prices, and all the stimulus programs, I personally believe the Australian real estate market is going to see a lot of growth in the coming years. So now is the perfect time to step into the market and set yourself up and position yourself to take full advantage of the next boom cycle. With that said, this is definitely not financial advice. This is simply my personal opinion, and I'm definitely not a financial advisor. I'm just a guy who makes YouTube videos for fun. But if you got value out of this video, please do me a huge favor by hitting that like button right there, commenting your thoughts, and consider subscribing for more content just like this. And I'll see all of you guys in the next video.